have something similar. So let me go to pound CAD. All right. So with pound CAD, I think I already have it marked out, but I'll redo it again just for you guys to see this. So with pound CAD, remember the same thing. It's the only pair that's letting us know or giving us even an inkling as to what's happening, because everybody else right now, I think they've sta- I think they've established it very well that the price, or most people by now are really bullish on the pound. We have such strong buy-in, yet we have this gap which is massive right here. Okay, so for traders who are wise, some of them will ignore this gap, but for the wise one, this will be a telltale sign that we are about to get a drop. Now, this gap, as I said, as of today, is 600 pips away from being filled, and there's a low nearby, so we can say we can call it a bit more than that. Okay, 172 plus 600, so 772 pips. So we have another 1,000 pip drop going on. Now, the significant areas of where I'm looking at for this trade to take place are here. So from the monthly time frame, okay, here's the validation point that we're at right now, okay, and then we have if I put this up here, these are the ones that we have available. We have this one and we have this one. Okay, this is the range of validation points. On the weekly, okay, I'll use another color. Now, the reason why I'm marking so many validation points is because we're going to use it as our litmus test to find out where we're going to go. So here's the strongest validation point we got so far on the weekly, starting from here. Horizontal line, and change this to pink or something so that it can stand out. All right, and then we have the next one down. None of these are because the bodies of the candles don't close beneath the low. So the next one down from this cell is here. Okay, so if I put this into place, let's look at this from a validation point perspective. So we have a range. Right now we're entering within the VP range. This is the lower bound and this is the upper bound. Now there's two situations here. Already from 2020, during the coronavirus period, we had a massive spike, which gave us a stop hunt of the previous year. Now, if I was to put a gray area over here, this entire area of supply is a multi-year supply. This is a supply zone from 2017, which has been keeping the price short from 2017, 2018, 2019, and 2020. Okay, so there's a couple of things going on right here. So with all of the macroeconomical issues that are taking place, all right, now we've had the stop hunt market structure break and a return. What all we really need now, okay, as I said on record again, we know that the pound is going to short way before what they're going to say on the news, but usually there's always a disparity. Right now, as I said, the pound has been going heavily long, even though we know the macroeconomical situation. So what we want to do is to keep our eyes peeled for any of these validation point areas. Now, this validation point created was where the stop hunt started from, and now the price is kind of bouncing around here. So what I'm looking for on the D1 perspective is that we need one more high to be taken, and my suggestion is that we have one high here and one high here. These two highs fall into the place of this. So if I cage the price and I put this D1 demand zone in here, supply zone, excuse me, I think as a projection, I'm going to add Fibonacci here. If you would like to take pound CAD and take advantage of it, here's what I'm looking at. If this last high gets taken, either the price is going to do one more bullish long on pound CAD here, at, I would suggest at 78.9 or probably 86. Since this is the wick, or this is the validation point that created the stop hunt here, or where the algorithm of the market stopped at for us to have the coronavirus short, I'm expecting the price to come here. Now, initially, I was waiting for this high to get taken, but clearly the bodies of the candles have closed above. So this is the two options that you guys have. If you prefer pound Japanese yen, it has this, they both of them have the same macroeconomical situation. It's just different price action in the way they look. But this short is only going to happen once. I repeat, guys, if you miss this short or you don't grab some of this short, the next time this is going to happen is the next time there's a UK referendum to go back into European Union or whatever. And that's 50 years from now. So this is a 50-year opportunity. The pound isn't going to drop like this again. All right, so be prepared. All right, now I'm going to teach the lesson now. I've left everything here. So if you've taken your notes, well done, guys, and we'll go from there. So let me quickly teach the other side of the lesson. So I've been discussing fiscal policy versus central bank policy, and I'm going to quickly do the teaching here. Let me find the chart that has the best space on it. Gold. All right, gold has good space on it. And funny enough, I'll be talking about gold. So let's have a quick recap, okay? So the triangle of death, as I call it, I know it's a funny term, but let's just talk about this again. So we have the US Federal Reserve, we have the few US government bonds, actually. Let me go there first. Now, if there's any questions, please feel free to ask, okay? For any of you on. If there's no questions and you're all good, type yes in the chat so I know you're all with me, because I know I've said a lot. But now it's getting serious now. When we first started out at the beginning of the year, it was a preemptive one that we were waiting for and waiting and waiting, but now it's here. Now, for those of me or those of you who are here when we took the oil trade, we waited one whole month before the oil trade actually happened. But when it happened, the entry was very tiny. It didn't look like anything happened. And then later on, Donald Trump just announced something to do with oil, and that was it. Wisdom went from what £11.54 to 2,500. That was his historical moment. Wisdom is still there, by the way. He's just working on some stuff, but he's there. But that was his moment. So opportunity when it comes, you don't want to miss it, because £11.54 to 2,500 doesn't happen every day. And I don't want anybody or any trader that tells you that happens every day or it can happen every day. It's lying, okay? Because the market doesn't provide the opportunity every day. But when it comes, it comes. So we don't want to miss it. All right. So we have the US Federal Reserve. And then we have this thing here, which is the US. I'll put it here, and I'll put the US Treasury here because it makes a bit more sense with the triangle. Now, today I want to go through how can you be protected away from. Now, from this year onwards, guys, from 2020 when COVID-19 happened. Now, I'm not a conspiracy theorist. It's a real virus, and I don't want to be oblivious to that and insensitive because people are dying from the virus. However, there is an aspect there that's important to see. Whenever there's great turmoil that affects the world, usually it ushers in economical reform every single time without default. If you look back in history, usually in 150-year cycles, you have these moments in history where there's a change in cycle. Now, we're currently in 19. If I was to talk about the beginning of the gold standard system end or the end of the gold standard system, so at the end of the gold standard system or the end of it was August 15th, if I'll be exact. So August 15th, 1971. Okay. President Nixon ended the gold standard system because of, basically fraudulent activity with the government that he tried to cover up. Now, right now, we're in 2021. So, right now, we're in a 50-year cycle from this event. Now, during 1971, there were many things taking place in the world which were affecting the US. Okay. Now, in 2021, 50 years later, we're 50 years from that point. Okay. August 15 will make it exactly 50 years since the gold standard system ended. Okay, now with all of the economic turmoil that's taken place due to COVID-19, it's also ushered in quite a few things. Okay, it's changed the way money is valued, the way money is seen. Okay, and if you're wise to be in from the beginning, then you know how to maneuver. So I need a space here. So if I quickly go through this, why is this triangle of death important, as I call it? Now, the middle of this triangle of death is the dollar. Now, I'm not against the dollar as a currency. I'm just against how the dollar is being run at the moment. I'm against every type of currency. All right. So to recap quickly, just to put a recap there. So fiat currency, or what fiat currency is money not backed by gold. Okay. But government promises. Okay. Or government regulations, basically. I'm going to call them government reg for short. Now, fiat in the Latin means promise. Okay, it means a promise of something or an establishment of a rule. Okay. Now, what was money before? As we know, if I was to do this, so from 1944 to 1971, we had the Bretton Woods system, and this Bretton Woods system was as follows. So I'm going to put all of our recaps here. How are we doing for time? Okay, cool. Finish this off. So, starting from where we are, And once you take this information in, please speak to your family members, okay? Speak to your family members, speak to friends that will listen to you to help them get ready, okay? Because what we have from 2020 March is a shift back from currency, and it's going to be very highly necessary for you to have money, not currency. And I explained the difference again. All right, so gold, and then we have the dollar, and then after that we have, I'm just going to put here every other currency. All right. So from our recap, as we're discussing the beginnings of this, and as I said, there's a lot more for me to go through. I'll be providing, for those of you in the school, I remember, as I said, there will be reports and there will be different things. That declassified document from 1974, I'm going to try my best to get the PDF so you guys can read it about the gold paper market and why it was created and stuff. All right. But here, so the Bretton Woods system, as World War II was ending, the world was in a very, very bad state because of what happened with the World War II. Okay, and the countries of the world were grieving from their loss of people and their loss of economy, loss of jobs. Everything was in disarray. And so in 1944, in New Hampshire, Bretton Woods, as the place, is named after the place, we had this meeting where 700 plus allies of the US met together so that they could discuss an international policy or develop a monetary policy that can be set in place for the economic system of the new world. Okay, so in 1944, what did we have? Well, from the war that started, um, in the World War II that started, so that when it ended, okay, we had this, crisis. Just as we've had a crisis with COVID-19, it's not the same, but it's still a crisis. Okay, and with that crisis came an economical shift. Okay, that started from 1944. All right, 1971, this system ended. Now, how was this system functioning? Gold was the money. Okay, so gold was the money, not the currency. It was the money. Okay, well, the better term which I want to get across to you today is the asset. Okay, it was the asset. Now, what is an asset by definition? Okay, so if a key for you guys in this season of time, as time is going on, is that an asset, okay, is a thing, if you want to call it that, that generates currency. Okay, or I would say it's a vehicle, maybe not a thing because that doesn't sound so good. I'll call it a vehicle. So, sorry, vehicle. Oh my god. All right, my pad's working out. Just put a vehicle. All right. So it's a vehicle that produces money for a person in the form of currency. Okay, so money itself, not to kind of contradict myself, is the asset, or gold in this case is the asset. Now the dollar, okay, or currency is the representation of the asset. Okay, so currency, representation of the true value, okay, the asset in paper, in a form. I'll put in a form. I was gonna say in paper, but it can be coin as well because we have pound coins and stuff like that, and then we also have, you know, notes. Okay, so the asset is the vehicle, and I spelled vehicle wrong. Let me just fix that. Sorry. So there's a vehicle that generates currency, and the currency is the representation of the true value. So this currency is not really the value; it's a representation of the value. Okay, and so what we had in this system, which was the best thing about it, is that gold. Okay, now, the system wasn't called a gold standard system, it's called Bretton Woods because it was more of a convertibility system in the sense that we had the gold convertibility system. And the gold convertibility system, to put into one line, is that for whatever dollars you have, you can convert it into an amount of gold from in the US. Okay. And this was done. So the dollar was used as the world reserve currency, which means that every other currency was backed by the US dollar, and then the dollar itself was backed by gold. And this opened up for the opportunity for a world trade to take place. Okay, and then we had this allowed for other countries to do business very easily without having to transport gold, which is very expensive, and security for security reasons can be very dangerous also. Okay, and then also takes very long, and the price can change and etc. So the dollar was a viable representation of the asset of gold, which is what really countries were trading for in terms for their services. Okay, and this is for those of you just who want the history. All right, it was set at $35 per an ounce. So for every $35 you make, okay, in business, you could change that in for 1 troy ounce, to be specific, of gold. All right, so in this system, and I'm focusing more on the asset side more than this, but we're going to finish this stuff off that we talked about. Now, with what happens in the US right now? So after the 1971 situation, the end of the gold standard system, we've gone into this system which we have right now. So from August 16th, okay, till today, all right, until further notice. Now, I do strongly believe we're going to go back to the gold standard system as time goes on. So I want to prepare you guys between now, so that you're ready between now to 2030, especially for the shifts that are going to come along. All right. So from August 16th, 1971, all right, till today, we have the fiat system. Okay. And the fiat system, okay, is basically a daylight robbery. Okay. And the reason why it's daylight robbery is because the money isn't backed by the dollar, or is not backed by anything but promises. Okay, and this is what opened up the room for fiscal policy. Well, I mean, there's always been fiscal policy, but it's opened up the room for more greater control for fiscal policy and even greater power. Okay, so fiscal policy equals to government monetary policy. All right, and I put on this side right here, I will delete some stuff so that it's a bit more smooth. Okay, and then we have central bank policy. Now, the reason why I suggest you want to continue doing research for yourself is because in order for you to be able to beat a system, you need to understand the system. Okay, as I always say in the art of war, if you want to be able to beat your enemy, as Sun Tzu said, you need to be able to understand your enemy and think like him. That's the only way you can really beat your enemy. Okay, and the real truth is that today in this infrastructure, not that the government themselves know you by name, but you are their enemy and they are your enemy. And if you don't think like that now, you're always going to be lackadaisical with how much you spend studying, how much time you spend reading, how much time you spend to invest in this skill of trading, which is the skill really to be able to understand the life of money, which is the life of the world, because in the world you need money to live, so you understand situations and things like that. Okay, so it's a very highly important skill. Okay, trading is not just about being able to tell if the price is going to buy and sell. That's the last part. But really and truly, to be a trader, what's important is for you to understand the psychology of men, how money works, how different institutions think. Okay, is a hedge against your family, because you'll be able to protect them from whatever's going on, because you understand how money works and how currency works. Okay, two different things anyway. So government policy, so central bank policy, okay, is a Federal Reserve policy. I'll just put banking infrastructure. Okay, that's the better term to use. So the infrastructure, now by definition, a central bank is the institution responsible for the infrastructure of how banking takes place in a country. So for example, the Bank of England, they set the guidelines and the rules for how every other bank in the UK that's in operation runs, how they lend money, how much money they lend, how much assets they have, how much liabilities and how much debt they allow to accumulate, and etc. They're in charge of it. So they're the ultimate monetary force in any country. Okay, and the biggest monetary force, or the most important one, is the Federal Reserve, because even though the gold standard is gone, every other currency is still backed by the dollar. Okay, and which is very important to understand. So whatever the Federal Reserve does, okay, and hence why I gave out what I said yesterday about controlling your trades and managing your trades during the news, is that whatever these guys do, the rest of the world will follow exactly the same. So if the Federal Reserve increase their interest rates to 50 base points, which is 0.5%, then you can bet that when it comes time for every other central bank to do their monthly interest rate change, they will do the same thing. Okay, because they're keeping in tandem with the US Federal Reserve. right? So next, if the government now needs money, so after 1971, what have we had to make sense of this? Now I'm going to spend a little bit extra time. If you have to go at 10, please feel free to go. Okay. I just want to make sure that you guys have this, and I think we need slightly extra time. Now I started 5 minutes past 9, so I'll try my best to keep it to about 10 past, maximum 15 past, and then we can continue next week. Okay. So what happens when it comes to money? So after 1971, okay, we have a continual deficit. Okay. Continual deficit. So this continual deficit comes from continual money printing. So the continuation or the continuing of money printing, okay, comes from the continual deficit. Continual deficit comes from continual money printing, or what we'll say quantitative easing. All right. So with quantitative easing by definition, or QE, all right, I'll put this here, quantitative easing. So for those of you who are taking notes, you can write this down. Quantitative easing is a very important measure that falls under the bracket of central bank policy, which is when a central bank prints more banknotes. And they usually do this to provide more money temporarily in the form of, or I'll keep saying money, but provide more currency, okay, within an economical, climate, for the reason of, there's a lack of money, or if they want to weaken their currency purposefully, they can do this. Because every time you print money, due to the nature of what we've had after 1971, where we no longer have this system where we just have dollar, we have promises, dollar, and, you know, other currencies, okay, the central banks can make policies on that note and be able to control the strength of a currency relative to others and etc. Okay, so quantitative easing is, I'm going to put this here, money printing. Okay, and money printing, along with the gold standard system ending, is the reason why every currency for now is, it doesn't look like it, but especially the dollar, they're all doomed to fail. Now, if you want to look at history, okay, in your own time, go and check out stuff like, I think one good country, if you want to, I'll get the link for you guys when I finish, is to watch this, or watch the documentary of how Zimbabwe got to the point where they had $1 trillion note. For those of you, how many of you know that story? Type yes if you know about that story. Okay. How Zimbabwe went into hyperinflation. Okay. Or the current situation in Venezuela. If you know any of those, type yes in the chat. Let me see what you guys know. So I don't see any comments. All right. So I'm assuming that you guys haven't heard of it, but I'm gonna make sure that you guys get to see that. I'm gonna send the link for it in the analyst corner. Okay. So to give a brief example of what happened in Zimbabwe, okay, the country fell into deep hyperinflation due to same thing, mishandling of, money printing, along with government corruption, okay, to the point where things, money basically became worthless, to the point where to buy a loaf of bread, okay, cool, yeah, so to buy a loaf of bread basically cost, I think, like 30 trillion Zimbabwe dollars, which was basically a wheelbarrow, worth of money. And I always hear a funny joke that some economists say that a woman went to go and buy a piece of pork in Venezuela, and when she was carrying all the money, she had, like, a wheelbarrow load of money to go and basically take in to buy a piece of pork. When she left the wheelbarrow outside, so they didn't steal the money, they tipped the money out and stole the wheelbarrow. That's how, weak the currency has become, or how worthless it has become. So anytime a country gets into this fiat system, now it's a bit different for the, I would say, the richer countries of the world, because they've managed to, deleverage, the situation of what they know has been done, and keep passing it on generation to generation. But it's only for so long you can do that until, things have to come to an end. So whenever a country doesn't have a currency, their currency backed by an asset, sooner or later the currency is going to fail. Okay. What saves the dollar is that it's the most used currency in the world. Okay. In order for you to buy commodities like oil, sometimes the dollar is actually called the petrodollar. And the reason is because, you know, 1974, President Nixon smartly made deals, or part of their deals that they did through Bretton Woods up to, 1974, around there, is that for a country to buy, is fractional reserve banking an element of this teaching? I will go into fractional. Yeah, that's a good point. I will go into fractional reserve banking probably in 2 weeks from now, but from a different standpoint. But that's a good point, Liz. That's a good point. I will be talking about fractional reserve banking because that's highly important too. Okay. The nature of loans and debts. I will go through that for sure. Definitely. And with it, when it comes to, I'm really happy you said that. That's a good point. So if you want to, guys, all right, it's not limited to the teaching, because the angle I'm coming from is for protection of the people here, for the people that are under my care, and for under the care of the leadership, which is you guys. So I want to make sure I take care of you. However, it's good to go and do some reading. I would say definitely, as Liz has talked about just now, please go and read about fractional lending. Okay, find out what that is. Now, in the course, it's there to a small degree. I didn't go into deep detail. I just talked about it a little bit just to give you a small touch on it. But it is an important aspect. Okay, and central banks are very crucial or very instrumental in how fractional reserve lending or fractional reserve banking happens, which leads to fractional lending. So on this note, are we talking about? So quantitative tapering is a reduction in currency. Quantitative easing, printing more money, weakens the currency, and then reducing the amount of current papers in circulation, or coins in circulation, increases the strength of a currency. And central banks, in a normal scenario, they are completely responsible for how this runs. Okay, and they make the decisions on that. Okay, they do collude with the government, but it's more of a relational thing rather than in a relationship which is very one for one, platonic. Okay. Now, whenever there's a financial crash like we've had from 2020 going on, as I said to you before, fiscal policy and central bank policy align with each other. Now, government policy, one of the things that are under government policy, and I'm going to put this here, and this is the biggest thing that's an important point here, is stimulus. Okay. So when stimulus is basically when the country injects more money into different industries. Okay. But where do they get this money from? This triangle of death. So stimulus, okay, is actually something that is basically what the central bank are responsible for. And central banks basically would be QE, what they would do. Now, when the government and fiscal policy become one or interchangeable with each other, it means that when the country is in a crisis. Okay, so always remember that if you want to ascertain to how a country's economical system is, okay, regardless of whatever economic model they have, this is the best way to see what happens when the bank and the government become one. Okay, so when money or currency and the government become the same thing, then you know you have a problem. Okay, and you can find corruption there and everything else, but that's not the side that we're going for. So how does the US government get money? So when they run out of money, so let's say the government needs more money for stimulus, the banking sector or the central bank prints more money. So the US Treasury is where the money, comes into. They ask the Federal Reserve for money, and then the Federal Reserve borrow their money at an interest rate of around about 2% possibly. Okay, so 2% interest, and let's say they want, $10 trillion. So 2% for e.g. $10 trillion. So this $10 trillion that they get, as I spoke about last lesson, all right, when they get this debt, now for the US Treasury to be able to, when they get this money, they use it to pay back debts, basically, that they've borrowed money from, or different things like that, and invest in the economy and whatnot. Now, to offset their debt, what do? They give out government bonds. Okay. So if you ever want to lend to nations, this is how you lend to nations. You lend to nations by buying their bonds, because you're buying their debt, because every government basically is in debt. So US government bonds, what you would do is they would give out, 10-year bonds at a bond auction. So we got a bond auction here. And once we get to the bond auction, it will be at something like, let's just call it 2.718%, because that's usually what they are. And so what happens is that we have government bonds being given out, or the debt of the government is being sold out to people from around the world. Now, what currency do they buy the debt in? US dollars. Now, the US dollar already, okay, is already a currency, or a currency that is in debt. Okay, so I would say people from around, I'll just say countries from around the world buy the debt. Okay, bond. So whenever you see a country give up bonds, now in the olden days, when a country's currency wasn't in debt, but they needed more money from the people, because how government should work, for as to lean on and continue the lesson, how a government should work ideally is that they should only be able to use what they tax off of its citizens. So from all of the commerce that takes place with all of the inhabitants of that country or that union, for example, the European Union, what the government really should be using as money for them to use and not just spending crazily, okay, which is what happens in the absence of gold, all right? Because gold is like a hedge, if you think of it that way. If you have more in the olden days, if you have a gold standard system, if you have more currency, then you have gold, then then the gold will act as a leveling plane to make sure that the ratio of gold to currency is 1 for 1. Okay, and if that imbalance isn't there, okay, it protects the people themselves, for example, the inhabitants of a country, from the government misusing currency, which is what every country has done so far. Okay, and why there's a need for the gold standard system. And I'll talk about crypto probably for 5 minutes, and I'll continue with crypto teaching next week, because I'm going to go down that direction. Then I'll come back to fractional reserve banking. Okay, so countries around the world buy the debt denominated in dollar. Okay, and now, in other words, the US government just basically loaned out money, okay, to from the Federal Reserve in order to pay the last bond auction that they had to get their debt. Also, paying other things in the country that they need to. Now, as I always say, if you have the first dollar that was ever in existence in the world and you borrow it from someone, if you didn't have that first dollar and they asked for $2 back, how are you going to pay them the second one if there was only one? So you borrowed $1 from them, you're walking around the whole world and there's no other dollar. Okay, and this is what the Federal Reserve, because they print money out of nothing, okay, there's no asset backing it. The money itself, okay, in essence, underground is worthless. Okay, it's not shown yet, but it is worthless because is that money doesn't exist. You only have $1. So with the Federal Reserve, this system we have, which I call the triangle of death, is what we have taking place. And if this is happening with the US dollar, it springs onto every other currency. So why am I saying this? When it comes to gold now, and the talk about assets, which is what I want to do a bit more today, I talked to you last time about the Bullions Bank, right? So with the Bullions Bank, okay, there's one thing that you need to always remember, okay? The Federal Reserve balance sheet, okay? And I'll be making workshops of how to read balance sheets. That will be part of these Thursday lessons, how to read balance sheets and stuff, okay? Gold owned and gold loaned is one line, okay? Now, any of you who are involved in accounting in any way know that this is very, very bad, okay? So in other words, accounts receivable, okay, and then accounts of assets, okay, are basically one line, which is basically impossible, and that shouldn't be the case whatsoever. But that is what has got taken place. I'm deleting all of this stuff just so we have space, okay? But this is what the Federal Reserve does. Now, who did they loan this gold to? As I said on Monday, bullion banks, okay? So bullion banks, okay, they loan this gold, and bullion banks, their responsibility is they sell gold to people aiming to buy it back at and I'll put here a lower price. Okay, so these bullion banks are speculative in nature. So they get this gold from the Federal Reserve. Okay, okay, a lower price. And what they do is that they use gold, okay, they sell it at high prices and basically aim to buy it back from the same people who have bought gold as an investment at a lower price. Okay, but the issue is that now with this massive discrepancy on the balance sheet, nobody actually knows how much gold the Federal Reserve has to back their dollar, or the supposed gold that they're supposed to have. Nobody knows, but we know everybody kind of figures that is less than the amount of dollars, but they won't say how much, okay? Because they don't want anybody to find that information out. Because if they do, it will cause a massive stir in the world, okay? But this is what we have right now, all right? All right. So this is where we are at the moment. So what about today? Why did I say that I want to start helping you with, speaking about how we can protect ourselves? So assets, okay, do a little bit of teaching on assets. Okay, as I said, an asset, okay, generates currency. Okay. And the asset, how an asset generates currency, I would say that assets work on what we would call pure supply and demand. Okay. So assets operate by pure supply and demand. I'm going to put this here. What do I mean by that? Because it's a physical thing, there's only so many houses. There are only so many cars in the world. There are only so many. Now, cars necessarily, most of them are not an asset, but you get the picture. So if I put a list of assets here, I'm going to talk on the financial side for a minute. So we have, okay, gold. All right. We have silver. And I will be talking about these in the times to come. Okay. Silver. All right. Now we have a new digital asset, which is cryptocurrency. I'll say specifically Bitcoin because of the nature of how Bitcoin is. I won't say other cryptocurrency just yet, and I explain why, okay, later on. But we have these three right here, which are definite assets, okay? And then we have other things like we have land, okay? All right. Property. I'll put land because land is separate from the property. So I'll put land and I'll put properties. All right. And there are others, but I'm just going to lay this out for to put the understanding there. So how can you protect yourself? So as traders, as we've had good trades we've had some good trades. I hope you guys have caught something this week. Okay. But the last weeks we've had great trades happen. And what we want to do now is that the question you want to ask yourself, which is what I'm going for today, is what do you do after you start to make currency? Okay. What do you do with the currency? Now, the first thing that I would say to you guys, this is not financial advice again, but is that in order for you to protect yourself, why would we want to do this? What we want to do here is we want to convert our currency into assets as much as possible. And why is this? Because an asset, okay, for example, gold, the reason why gold is an asset is because it's been here since time began. Okay, it doesn't rust, it doesn't rot, sorry, and it doesn't rust. I was meant to say rust, but I said rust, so rust and rot. Okay. And also because of the chemical makeup of gold, I talked about it briefly. Okay, gold from the chemical perspective. Thank God I had the background in chemistry and my master's in pharmaceutical science. So I've done a lot of extensive studies with gold. Gold does not react with anything, is what we call inert. So as a source of financial value, if it's in your family for 2,000 years, if your family left you an asset of gold 2,000 years ago, 2,000 years later, you will still have that gold if it's buried in the same place. It can't be eaten, it can't be eroded. Silver, slightly, and that's why silver has more physical uses and applications because silver is a bit more, um, I would say a little bit less indestructive than gold. Okay, because silver can still react in air after a while and turn a little bit green because of sulfur in the air. But it doesn't, it happens over a long period of time. However, silver is another asset itself. Okay. Now, why are all of these assets? The key here is that there's a limitation to how much they are. Okay. Supply and demand, true science. Now, with currency, we have over here an artificial supply and demand. So this currency printing and currency reduction is the central bank and the government's form of supply and demand. When there's more money in the economy, along with other economical factors, the currency is weaker. And then when there's less money in circulation and stuff like that, then the currency is stronger. This is artificial because it's based on nothing. It's based on promises. However, assets themselves, okay, are based on true supply and demand because there's only now, if you go on Google and you type in what is the size of the earth, you will get a number. But when it comes to currency, which is the big difference I'm trying to get across to you today to lay the foundation, is that there isn't a number. Okay. In other words, because there is no limit to how much currency can be in circulation, there's to no limit how much of supply and demand can be. In other words, we have an unlimited supply. As much as there's paper, if you want to be very, very highly cantankerous with it, as much paper as there is in the world that is available to the government of, for example, of America, or to the Federal Reserve, I should say, that's how much money there is. Okay. In other words, which is not really a great asset to be able to something for you to hold on, because if you, the more common something becomes, if you think about it, then the less of a rarity. Like I remember when I was younger, there was a time where Ralph Lauren was very expensive because Ralph Lauren was something that, not everybody had. But then when everybody had it, until the chicken and chip shop guy is frying chicken with it, it's lost its value. So it's not as expensive as it was before, apart from inflation. That's another issue, but it hasn't got that value factor, so it's not as popular as a brand. Whereas other things which are more expensive and more highly sought after are more expensive. So that's a form of supply and demand. But with assets, what do they do? Number one, they create an infrastructure of true supply and demand. There's only so much land that exists in the world. There's only 30% of land, 70% is water. Bitcoin, there's only 21 million Bitcoin, and there'll never be more. Once the 21 million number, the final Bitcoin is mined, there will never ever be any more Bitcoin. At that point, it becomes something of supply and demand. So whatever the asset or whatever currency is of the day, what's important for you to know is that that currency will generate money. So why is it a safe haven? Let's talk about gold, for example. Okay. Now, gold is going to be around. There's only so much gold that exists in the earth. Okay. Now, if I put the numbers here, I think it's 3 parts per billion. I think it's 3 parts per every billion parts or particles. Okay. So for every 3 particles, okay, for every billion particles there are on the Earth's crust, there's 3 particles of gold. So very, very, very scarce. Okay, and scarcity is what helps something to become an asset. Not everybody has a land, and lands, what do they produce? No matter what time it is, there'll always be rain. Okay, or we always hope that there'll be rain. Okay, and so there'll always be a land. So this is why the price of an asset can go up and down depending on the market demand for it. That's true supply and demand. And this is what we want to aim to. So the question I want you to leave here asking yourself is that when you actually start to make money or trading, what are you going to do? Are you going to go and invest in mainly in things that you like? Now, it doesn't mean don't have any currency at all, because then otherwise you can't pay bills, you can't use in the shop. Now, it is coming to a point where you can actually, well, I think this is already here, you can actually pay in Bitcoin. Okay, but you can't pay in any of these other ones for now in the same way. You can't go to the shop and sell, 0.05 of your land. Not right now, anyway. Probably that might happen with cryptocurrency, but that's another story for another day. But I want you to start to ask yourself, when you start to make money, are you going to hold all of your money in a system like this, which, as I said to you last time, and probably as I talk, it probably gets higher. Okay, sorry about that, wrong button. Let's write this down. So for every $1, I like to come with the facts, and you can go and search this out to make sure it's valid and true. For every $1, all right, 60 cents out of that dollar is printed money, or money made out of thin air, if you want to put it that way. Okay, the remaining 40%, okay, which is the cents, comes from commerce, which is the right way. I'll put comes from com for short. Okay, so as I said, the government, how a government should work should be for the people, not for themselves against the people, or the people their enemy. But due to the nature of the system we have, governments are, in other words, our enemy by default. Once you're born into a country, the government is your enemy until the gold standard system comes back. If the gold standard system comes back, then there can be a collusion, between the people and the government. So really, why tax is in place, and I'll talk about tax in a bit more, is tax is supposed to be there. The government basically takes the tax from the people's commerce, and they take that money to put back into the people, and of course to replenish themselves and to make investment. But the government's responsibility is to create an infrastructure through policy and through, clean policy and law to allow for there to be growth in the country economically, and for different industries to, be established which are not there, and for ones that are there to be bettered. That's what a government's supposed to do, and also protect the country from possible enemies, and then make a good relationship with allies. That's what a country is supposed to do. And governments are only supposed to spend money which they can tax, or which comes from commerce, which they can tax. But governments right now are spending money that doesn't come from tax. It comes from printing, just pressing a couple of buttons on a printing machine in a hidden place somewhere in the Federal Reserve or any other place. So can you see the disparity there as to why this is important to be ready now? because coming into 2021, we're 50 years after the gold standard system. We're in a cycle where we're about to see a new one. And so if you're on the wrong side where your mind is focusing on currency, now I know I'm a currency trader, you guys are currency trader, we trade forex, that won't change. But you have to start to prepare yourself to be ready on the asset side. What is pure supply and demand? Okay, because sometimes we these they show us pictures. Oh, like 10 years ago this house was on. That happens a lot when I speak to people. Oh, 10 years ago, me being from Hackney, oh, this house was only you know or 20 years ago this house was only 20,000. Or you hear parents say, oh, when I was 25, in 1971 or whatever, this house was 20,000 for a 5-bedroom house, and today the price has increased exponentially where it's worth 1 million. Now the reason why the price has increased is not even because the house has changed, there's any more floors in the house or anything like that. Let's not get technical. Let's just say that the house just remained as it was. We kept it clean, but it's not in use. Why has the price increased so drastically? Okay, first of all, that asset, of course, commands the money of the day or the currency of the day. And that's why you're safe, because it's a physical thing. But because of inflation, because of demand, because of a lack of housing, because people need houses, okay, there is a need for it. The price has increased. And you'll always be safe if you have assets. So I want to kind of charge you today. This is just a foundation lesson that you want to start thinking, what are you actually going to invest in, okay, after you start to make currency, okay? Are you going to invest it into money or into assets, okay? Or are you just going to spend it all on currency? So I'm going to leave it there and end the recording. For the recording's sake, actually, are there any questions at all? I'll take 1 minute for questions and then I'll call it that. I hope you enjoyed today's lesson. If you did type a yes, let me know. If there's any questions, don't be shy. I'll give a couple minutes for 1 minute for a question. Any questions? Yeah, you enjoyed? Okay, thanks. I love that you enjoyed. Thanks for the info, bro. Okay, name all good? All right, no problem.
Serious Michael.
Yeah? Thanks, bro. Thanks, Maya. I appreciate it. Yeah, great content. Keep up. Thank you, Liz.
Thanks for that, Michael, man. I appreciate it.
No problem. I appreciate it. All right. So for the students who, as I said, this lesson, I told you to let's see, solid. Thanks, bro. I appreciate. Oh, solid. Oh, you saying, bro? Thank you, man. Thank you. Okay. So I hope you guys enjoyed. I told you guys today that you can bring family members to this one. This is very, very highly important. This is like the reason for what I do and the reason for why I do business, because we're in a system like this that at the moment is affecting many, many people without them realizing. And what's worse is that it's going to become even more worse and they won't even realize. Okay, so with this session, I'm going to hold one more like this. Okay, feel free if you want to bring family members or friends who don't know about these things and would like to know, let me know. And I'll be more than happy to let this, go up for them. So I hope you enjoyed that, guys, as I said again, and I'll catch up with you guys later. Take care, okay?